There's so many different nuances to what you do on a daily basis. People look across the board and say, okay, interest rates are X, interest rates are Y. Are the interest rates that simple? I guess that would be a question for you. Are the interest rates so simple that you just look and I can expect my interest rate to be here?
I get this email probably at least once a day, which is, what's your rate? Right? And it's a valid question. What an absolute valid question, because interest rate's obviously a very important part of the equation of buying a home and making sure it's affordable. The trouble is there's so many, I don't even know which angle to approach this.
And this is a question, actually, I want to point this out real quick. This is a question is, how does the interest rate affect my mortgage?
Oh, okay.
This is valid inside of this piece of the conversation.
Okay, cool. Yeah, I knew you were just throwing a fastball at me. So interest rates, there's so many factors that make up an interest rate. So there's the interest rate that you as a consumer see, but then there's all these adjustments behind the scene that are going on, not even on the loan officer level or even the company level, right? So I'm Drew, the loan officer, and then there's American Pacific Mortgage and O2 Mortgage, which is the same company that I work for. It's their level. But then there's these huge entities out there that are called Fannie Mae, Freddie Mac, FHA, VA, that are huge. And they're the big ones that actually dictate how interest rates are priced out, how loans are priced out. So, I might say, okay, my interest rate is this, and somebody else might say their interest rate is that. But all of the adjustments are happening basically in Washington, right? On the East Coast somewhere. So you have all these changes going on, and there's so many nuanced things that are going on with somebody's file that it's so hard to compare apples and apples with one lender and the next. And there's ways that you can manipulate it as a lender. And I say all of this not to say that my industry is bad or not transparent or truthful. It's just the way that this system has been set up. So what I would encourage a consumer to do is you can look at the aggregate, right? You can just type into Google, what is the average 30-year fixed mortgage today? And it will give you an interest rate. Remember that typically on any kind of sticker that you see on a window or on Google, any interest rate quoted is typically got some sort of what's called points attached to it, meaning that you're paying for that interest rate. I know this is probably deeper than where you want me to go, Sam, but I'm going there.
Mortgage points is a question also.
So points, sometimes it makes a lot of sense because you're basically paying the lender for the privilege of having a lower interest rate, but there's a kind of return on investment that you have to run on that. And so for instance, today, as of time that we're recording this, I would tell somebody, hey, in most cases, paying points doesn't make a lot of sense because the likelihood of lower interest rates to come probably pretty high. So you're going to rewrite that loan. So why pay all this money to get that perfect loan when you're going to redo it anyways? So it all depends. A couple of years ago, I was actually pro points, right? Hey, you probably will have this loan forever, guys, so let's just pay points. And so you have to run that scenario to figure out what makes sense. And again, I don't believe in a one size fits all, but if I was to give general advice, you would have to figure out, do you think you're going to stay in this loan for longer than it takes to break even paying those points?
Yeah, that's a great way to put it. And so if we were to put a fine point on how does interest rate affect the mortgage, is there a fine point that you can put on that?
Yeah, thanks for bringing me home here. Obviously, the higher the interest rate, the higher the payment. The lower the interest rate, the lower the payment. So it does affect it in the fact that qualifying for a mortgage is you're not going to qualify for as much as interest rates rise.
Yeah.
Right. So interest rates have changed from, over the last 12 months, they've increased. So you don't qualify for as much loan as maybe you did 12 months ago because the way interest rates have moved.
So, okay, yeah, that's a great way to put it, is that it does affect your qualifying ability to purchase a home.
Certain.
And price. It affects your price. So that's a great way to put it. And
what we call it is purchasing power, right? So
yes,
the higher the interest rate, the lower the purchasing power, right? So
perfect. Yes.
It's a struggle right now because you've got a higher interest rate market, but home prices haven't come down the way that they should when interest rates double.
Exactly. Yeah. It's a pretty remarkable market. There's no question. I feel like we always see a remarkable market regardless of what's happening everywhere else. The Bay Area, Silicon Valley is such an anomaly for everything else. You can't look at everything else and expect the Bay Area to mimic what's happening everywhere else. It's really interesting. And then as far as mortgage points go, when you talk about mortgage points, what is a point?
Point is an additional cost on top of all the other costs associated with the loan and buying the home that you would pay to have a lower interest rate. So 1 point is 1% of the loan amount. 2 points would be 2%. 1.5 points, 1.5%.
Perfect. Okay, yeah. And then since we're talking about rates, when you look to lock a rate, is there something you can say that's a quick synopsis of when to lock a rate?
Yeah, as mortgage professionals, we follow the market, and that certainly means the stock market because that's an important part of it. But more importantly for us, we follow the bond market because that's where mortgages live. And then in today's world, it's always important, but today it's very, very important. We follow what the Fed is doing and inflation. So when somebody says, is it a good time to lock an interest rate today? We're going to be looking at, okay, what does the economic calendar look like this week and perhaps next week, depending on our window of time? What's going on in the marketplace today, and what do we see? Of course, we could have lots and lots of opinions about the market. We certainly do, but the market has zero opinions about us. It's going to do whatever it wants to, right? So we'll give you lots of guidance and tell you, there's probably some upside here to float maybe a day or two until you want to lock your interest rate. Typically, you can't lock in an interest rate, though, until you're in contract.
That's a great point, and it makes perfect sense. When I first got into the business, I had learned, and it wasn't from Dave, of course, but when I first got into the business, so Dave said, who is the manager of O2 Mortgage, was my mentor when I got into the business as well. And when I first got into the business, I remember speaking with different people about when the best time to lock is. And then I talked to Dave, of course, and we had a whole different conversation. But one of the theories was that Wednesday was the best day to lock. It makes no sense in any way, shape, or form. How is Wednesday the best day to lock? Especially knowing everything that you know now. Mortgage-backed securities, T-bills, everything else that moves along inside the market. It was a big misnomer of maybe Wednesdays, maybe Tuesdays, who knows, maybe Fridays. Market feels great on Fridays, right? So, but it's very important that people know, again, going back to you being a great loan officer, having amazing experience and understanding the different programs, it's very important for somebody to work with a loan officer who knows what they're doing and is seasoned not only in the area, but also in mortgages and closing mortgages day in and day out. And I think it's very important. Your time is important, and there's a couple other things that I want to ask. So there's 4 questions left. I think we can get through a few of them real quick. Length of closing process.
So rapid fire them right now?
Yeah, let's rapid fire. That's fun. Okay, so length of closing process. What's the typical length of closing process in your opinion or in your experience?
2 weeks to 30 days.
And that's about right inside the market. That makes perfect sense. And one thing I would say is that not all loan officers can close within 2 weeks. So that's a huge feather in the cap of O2 Mortgage. Escrow account. Can you explain an escrow account real quick?
Yes. Escrow account means that you're paying your mortgage, your taxes, and your insurance all to the lender, and then the lender is going to pay your property taxes and your insurance on your behalf. There's no right or wrong answer to it. It's a matter of your personal preference. Do you want to pay them yourself, or do you want to pay them all together?
Perfect. And let's see, mortgage payment. What does the mortgage payment include?
A mortgage payment typically includes your principal and interest, depending on your loan, of course. And then if you have PMI, which is private mortgage insurance, another acronym for you, that would include that. And then if you have an escrow account, which we just covered, then it would cover your taxes and insurance as well.
Perfect. Okay. When is a good time for somebody to consider a refinance?
When I call them, tell them
they should just do it.
Right now, we don't see a lot of them. So, death, divorce, debt, right? Repaying debt. It's hard for a rule of thumb. I would tell you, if you're going to save enough money where the cost to do the refinance is warranted. And please, there is no free lunch. There is no free mortgage. There's a cost somehow. Right? You can roll it into the mortgage in one way or another, but there is a cost. So as long as the cost is less than the benefit and within a reasonable amount of time, then it makes sense to refinance.
Yeah, that makes perfect sense.
Lender can break it out for you.
Yes, absolutely. And again, it goes back to the education, right? You want to make sure that it's in black and white and you see what's actually going into it so that you can take the reasonable steps to put it all together and say, okay, this makes sense or this does not make sense. I think that unfortunately there are people that will just say, this makes sense and this is why. And you really have to make sure you're working with somebody, especially on a refinance. If it's not something that you're familiar with, work with somebody who is going to take the time to go over it with you and the benefits and point out the actual costs. I think it's very important. And I know you guys do that there, don't you? So here is the answer to the very beginning, what I said, as far as what is the biggest reason, most common reason that a real estate sale falls apart. And we have a couple minutes to talk about this. So the biggest reason that a real estate transaction falls apart is because the buyer cannot close the loan, which is pretty amazing. We've talked about this entire time because it really goes back to when you're working with somebody, you want to make sure you're working with the right person. On my side of it, for Silicon Valley, many times we will go into an offer with very minimum contingencies, meaning, and I've done videos on this, but very minimal contingencies because our market is so competitive. Even when the market is not smoking hot, it's still very competitive. And we want to have as little contingencies as possible because if you are a seller, you want to make sure that you're going to close the entire transaction. And we typically have at least 1 or 2 people who are interested. So it makes sense to have those minimal contingencies. So pre-approval and pre-qualification, what's the difference between those two?
Yeah, I'm going to actually give you one bonus one too. So pre-qualification, to me, we call it the cocktail conversation, right? We're at a party. Hey, what do you do for a living? Oh, I do this. Okay, wow. Sounds like you could qualify up to Blake. I've done nothing. A lot of the online lenders, and I won't name names, that's what they do. They don't call it a pre-qualification letter. They usually call it a pre-approval letter, and they'll pull your credit. So they'll make sure that your credit doesn't look horrible, and that's it. But they're not gathering any documentation, okay? Other than maybe a credit, maybe a couple other items. Pre-approval, they gather all the documentation, and we're talking, pay stubs, W-2s, tax returns, bank statements, everything you would not share with a stranger. You're going to send to a lender. They're going to review it all and confirm it looks good. Okay. But again, on a pre-approval, that's somebody like me who's technically a salesperson reviewing things, right? And I've got a team that does a lot of this for me, and they're way better than I've ever been. But we're still on the sales side of the equation. The bonus one is the fully underwritten approval. Okay. That means we've taken what you've sent us to get pre-approved and we've shipped it off to an underwriter. And an underwriter is not a salesperson. They're trying to assess risk and confirm that this is a good risk for a bank. And if you get an approval from an underwriter, that's the gold standard. And that's when you can go to Sam and say, hey, let's sharpen this contingency time frame and move very, very quickly. It's going to help you with removing your financing contingencies. It's going to help you with closing quickly, 2 weeks, right? There's no way we can close them. We've done a lot of the heavy lifting already in that short of period.
Absolutely. And what was the bonus one again?
We've got pre-qualification, which is just a cocktail conversation. We've got pre-approval, which is you sent in all your documentation and a lender has reviewed it. And then you've got a fully underwritten approval, and that is a underwriter reviewing it and actually issuing you something standard that says, yes, we've reviewed everything and we agree with it.
And that's huge. And having the fully underwritten approval going into it, that really helps us to check the box. As we're putting an offer together, we want to make sure that we put our best foot forward. If I'm representing a buyer, and if you're a loan officer that we're representing a buyer together, and you have a fully underwritten offer that we can actually give to the seller, it makes it even better because without the contingency of the loan, it's already been completely underwritten. So there's no question that the buyer's not going to have any problem at all moving forward, and the seller's going to be able to close based on that. And knowing now that one of the biggest reasons that a transaction falls apart is because the buyer cannot perform on that sale or on that purchase, it really just, that fully underwritten offer makes it so much better. That's really incredible. It really is.
Yes. Can I ask you a bonus question?
Yeah.
All right. So what's the so what to all of that is, who cares if somebody offers more money and they're not fully underwritten and there's a chance that maybe it falls through? Why does the seller even care?
Well, that's a great question. And I'll answer it in the sense that I'm not sure exactly where you're going with it, but I'll answer it in the way that the reason the seller cares is because if the deal does fall apart, if it doesn't work out, the market might shift into a negative direction. And now the seller has to put the house back on the market. One of the worst things about that is that when the house goes back on the market, it looks like a bad mark on the house itself, because it's not very often that it does fall apart. And when it does, the first thought, especially in our area, if it's on the market for longer than 20 days, maybe 30 days, and even though it's gone pending, once it comes back on the market, people are not going to have the same reaction to it that they had at the first. What is the best way for people to get a hold of you? I'm going to have all your information down in the notes also, but what's the best way for people to get a hold?
Yeah, I'm very active on Instagram, so it's just my name, Drew Frampton, on Instagram. Our website is O2MTG. That's O as in Oscar, the number 2 MTG.com. We've got a bunch of different resources on there if you want to check us out, or call Sam because he's got a bat line to us.
Yes, absolutely. 100%. I'm always happy to send people your direction, because I really do know that when people come to you guys, they're going to be taken care of and they're going to be guided the right direction and they'll be educated on it. Sometimes people don't always hear what they want to hear, but they get the light shine on things that otherwise wouldn't be shined. So it really makes sense to make sure that you're working with the right people, and Ocho Mortgage is certainly those people to work with.
Appreciate it, Sam.
Absolutely. Awesome.